going on? It's me again. Thought I'd do a live trade recording as the other one before the last video buckled on me and I lost it all. I'm looking at a short EU at the moment. It's the 1st of December 2021 and it is just 2 minutes to 10:15. We're currently bullish on the H4. We reacted off weekly supply to demand flip from this reaction here, and that's Friday's price action, which enabled the 4-hour bullish break of structure. And since then we have been breaking H4 highs to the upside. And then yesterday news came out, I think it was Fed Power or one of those market shakers. We swept liquidity above this daily buy to sell, as I'll show you here. This one here, this daily buy to sell, and it mitigated something. Oh, it's not you. And it mitigated something in this 4-hour supply. So buy side of liquidity was purged, which means buy stops and stop losses on short positions were liquidated, as that was the counterparty liquidity for the shorts to be entered. And that's exactly what happened. As you can see here, news came out, an aggressive M15 bearish break of structure to the downside. And then we failed to close below the H4 low. We wicked it, which still is telling me that if I'm reading structure, it's still indicating to me that we're still bullish on the H4, because if you can see here, there's no close below the low. It's a wick. So we're technically still bullish on the H4 in my opinion. That's how I read structure. But considering we are high time frame bearish, so go to the daily. We are high time frame bearish, like hell status. We reacted from this weekly level. This could be, I'm not predicting, but this could be the end of the daily pullback potentially, if it had enough liquidity above those highs to push price lower. If it does that, then this was the catalyst behind the pullback. And so as you can see, we were quite corrective through Asia, and then we sweep this Asia high here in London, I believe. Yeah, London, sweep that high. We mitigate a 1 minute buy to sell, which I'll show you. So we mitigate an M1 buy to sell, which is a supply to demand or demand to supply flip. So this buy to sell here, reaction from demand, true demand was in the market, should create a new high but does not, therefore creating the flip. So that's where that wick reacted to. And then from that PA, we had the M15 bearish change of character to the downside. So we're currently bearish on the M15. We've had a reaction from the premium of this current M15 range at a M1 buy to sell. So it's a flip in itself. And that enabled the bearish chock. And throughout that whole ordeal, we actually swept Asia highs. So liquidity was taken above the highs. And now we're in alignment now. We're trading the order flows in alignment with the M15, but we're currently trading counter trend to the H4. But considering we're high time frame bearish and we swept liquidity above this daily high, the buy side of liquidity was purged. It might be enough to fuel the move to just continue breaking these lows here. So my reasoning behind this trade here, I'll go down onto the 1 minute. Still need to enter this, which I will while we're here. Do a 4 pip stop. So that's just tagged me in. See what it comes with. So reasoning behind this trade here, as you can see, we had our M15 change of character, so buy side of the curve. And then if true demand was present, right? True demand was present. We should have a reaction from demand and then create a new high. As you can see here, this PA here, we actually didn't close above this previous high, which is a good indication as well. And we did close below these substructure lows. So this would be our demand here, range, and then that was our reaction to supply. So this would be, in my opinion, the decisional. And maybe clean on 3. No. Back to the 1. So this would be the decisional, in my opinion. You can argue that that would be a decisional as well, and that's the extreme, but I was watching price here. I didn't really like how it was forming. Like I would have preferred an aggressive push away or at least close below this low to consider shorts, because there is areas above, taking that in mind. So in turn, yes, this was used as liquidity, structural liquidity. And we came to mitigate this M1 demand to supply flip. So that is our, so picture the wicks here, right? I'll go back again over this whole wick theory. So starting from this range here, price comes up, comes down, comes up, breaks up here, and then comes down. And then with this buy to sell, we get that reaction and then a fail to create, and thus creating a flip. So that was a valid POI in my opinion. And that's where we reacted from here, currently in price. And this is where we got our exact same entry model as every other time. That we get our chalk. So demand, it is formed as demand once we break that high. Reaction from demand with that last buy to sell, and then the failure to create, thus creating the flip. Same thing over and over again. I just trade the same setups over and over again, and that is totally fine to me. So yeah, we had the M15 shock. The sell side of the curve was initiated. Then we were in the buy side of the curve here. We had a reaction from a POI within the premium of this current range here, which is always good. And then upon reaction, we had an M1 chock and flip, followed by an actual M15 chock. So that is telling me that bearish order flow is in alignment with M15 structure, because this is takes the high and takes the low, meaning sell orders are introduced, buy orders are unsustained. Therefore, we break these minor lows, and then sell side of the curve, buy side of the curve. High gets taken, high takes the low, more sell orders are accumulated, therefore breaking, therefore aligning with our M15 structure. Now this is the current trade I'm in. So targeting that low, which would be deemed weak, as we've had a reaction from a demand to supply flip and an M15 chock. So I would deem this low to be weak. That would be a 7.8R trade, 7.85. So we'll wait and see, see what it does. I'm just going to pause that for a second and make some tea. I'm back again. Sorry about that. So what I'm seeing here is all looking pretty good in my opinion. We had our reaction from our flip, tagged us in from here, and we are yet to see a change of character. Excuse me. Pig. We're yet to see a change of character, but this is where I suggest you test this. It does work. Not all the time, but it does. So once we break this high here, we form demand. We have our reaction from demand here, right? And we have our failure to create, and then we don't close below it, but we wick below this initial reaction. So in turn, that will classify as a failure, as so you can trade it as a flip, because this is where the buy orders were introduced, but sell orders overpowered buy orders, therefore supply overpowers demand, and we trade through that initial reaction. So supply is really kicking in my opinion, and bearish order flow is starting to align. I'd be more confident when we take this low out. If we get a nice close below it, that'd be pretty good. And then we could look to target this low. I'd probably take partials at this area, being a flip, and we're not really trading in alignment with the H4, so I'm happy taking partials when counter trend. It's better being safe than sorry. But there's no reason why I shouldn't take this low, considering we've had the M15 change of character by the sell side of the curve right here, and then what to expect after a break of structure of any kind, either sub or minor or just a full swing boss. You can expect a pullback, which is the buy side of the curve. Mitigate supply area, whether it be the decisional or the extreme. And what we did was we waited for it to mitigate. We didn't just set a risk entry on these. That is ballsy if you do. Like a risk entry on the extremes, fine in my opinion, but on the decisional, ballsy. And upon mitigation of that, we waited for our entry model, and yeah, we hit it. The only thing that I usually look for is when I, with my entry model, is that upon mitigation to a POI, I like to see structural liquidity get swept. So a high or a low. So in this case, it'd be a structural high to be swept. Usually I would like them just resting below the POR. So that is used as inducement. It's just another confluence I have. So have a look at it, test it out. But if it doesn't have structural liquidity and the entry model plays out, I usually just play the extreme of the move. So as you can see here, we are getting a nice move away from our entry point. So the bearish order flow has kicked in. There actually is news in 1 hour and 43 minutes. So I'll definitely be closing before that. It's US news, so whether or not we get to this low before then, who knows, but I'll be closing before that. Maybe take off majority even and set my stop loss to BE and just let it do its thing. But that's obviously if this whole trade idea formulates, which it is playing out thus far. Yeah, I'll actually just show you while I've got it up, just so I'm not talking absolute smack again. Well, I never was, but I just got to make sure you know that I am not lying. See the sell there? You see that? Yeah. Right on the money with that entry. Now we wait. Like usually, if I set an entry and it tags me in, I wouldn't just sit here and watch the 1 minute candles print, because that would just fuck with your head. You'll tend to prefabricate some ideology in your mind that would steer you away from your original narrative, and you'll end up second guessing yourself. So usually once I'm tagged into a trade, I'll set an alert at my stop loss and an alert at the previous low or high. So in this case, it'll be this one. Or usually I set an alert at like 1 to 3, and then I usually just set BE there, 1 to 3 or 1 to 2. While we're in the trade, maybe I could go over some things. Yeah, so seeing as we are bullish on the H4, I'll get rid of that. Bullish on the H4, but we're bearish on the M15. You can assume that it's a pullback. But you got to take in mind, considering we swept this H4 low, if there are enough resting orders here, right? So buy orders in that instance to push price up, like that takes a lot of money for price to accumulate here and then break a 4-hour high. So if quote unquote the market maker wants to continue bullish, then what sense does it make for them to liquidate their long positions, right? Considering we are high time frame bearish, after seeing this sweep of this daily high, which there would have been highs resting above, because you can consider that as a structural liquidity here, that high, and then this high. Going back, considering we're high time frame bearish, yeah, look at that, even this one as well. So like that's just like your triple top, like that's retail mentality right there. Considering we're high time frame bearish, they want to be seeking buy side liquidity to purge, to continue shorts, right? So in order for them to do that, they need to engineer highs in the form of structural liquidity. So this is one here, this is one here, and then this one here. And as you can see, even here on this PA, we had an M15 shock. So that is like perfect inducement. So a lot of people would have been wanting to short from that. But as you can see here, without a reaction from that M15 shock, it absolutely obliterated through it. We mitigated this H4 supply, and then we tanked away. And then we also left a flip here as well. So that makes more sense for me to take shorts after seeing this, right? More so than longs after seeing that, because of the high time frame. And high time frame is king, in my opinion. But don't take my word for gospel. I could be completely wrong. I'm just going off, just breaking things down, like what's the terminology? Never mind. But I'm just breaking things down bit by bit to understand in my own ways what the intention was behind each move. So that's how I'm deriving my trade idea from. As you can see, we'll go down to the M15. Where did that actually hit? Let's try to find the point where it actually hit. Oh yeah, cool. So it was this last bar to sell. Took out that high here. So this is a flip as well, right? So price correctly moves up, buy side of the curve in conjunction with this one. Correctly moves up, creating demand, forming demand, and reacting to it. And then we break this high here. This will be a low time frame demand. Break this high, we have a reaction, stalls a bit, and then we fail through. So that is a flip within itself. And then let's see if we can see the exact moment. Okay, before that, I'm going to take that off and see if I'm right with this. Sheesh. Let's go bar replay. All right, this is going to be me just honing in, see if I get it right. This reaction. I'm going to say this doji here, as this was reaction to supply, this one here, failure, reaction to demand, failure. Yeah, so very close, as you can see here. So it reacted from that doji and then tanked. And also this would have been a very clean move as well. So once we do purge those daily or this M15 high and that daily high, all the structural liquidity was taken. We react to this M15 flip, and then we get another chock, and I'm pretty sure that takes out high 829. I know that's equal highs here, but then very clean entry off that. I'm going to be quite aggressive with that one. That made it even nicer as well. So that would be classified as structural liquidity because this high takes out this low, and then price reacts to demand. This is the catalyst behind the pullback, the buy side of the curve. So we react to demand, catalyst behind the pullback, and then mitigation of this last buy to sell, and then that thing just went to hell. That was very clean. Let's see where we are currently. So it's kind of starting a little bit of a supply chain at the moment. See what happens. Yeah, look, I'm going to pause it so you're not just watching me or listening to me breathe. Now I'll come back when we either hit stop loss or we see price form a bit better. Then catch you in a bit. Back again. Didn't take too long for price to formulate pretty well. And as you can see here, we've we have had a reaction to this demand. And going back to what I was saying before, how this is the initial reaction to demand. If true demand was present, should be enough buy orders within this area here to sustain price to break this previous high. But as we are reacting from I guess you can say, I wouldn't say that's high time frame, but because we are reacting to this M15 buy to sell range, and there's a refinement within, the order flow is bearish, the M15 is bearish. We've had our entry model present itself here, enabling another M15 change of character. And then upon mitigation of our refinement, this is where we've had another demand to supply flip. And as you can see here, price came back, retraced, and used this demand here as the catalyst to the pullback, to the mitigation, to the flip, and then the bearish order flow commenced. That's one thing you should note, is that if I haven't already repeated myself, which I tend to do, but price always moves from demand to supply to demand to supply to demand to supply all the time. That's just where it targets, as you can see here. I'll even go here, show you. So you're probably wondering why it landed here, right? If you see here, like, just watch this and say, this is not hindsight, I just know because I've seen it. Demand, reaction to demand, trade away. Creating the flip, price liquidates, right? We react to this flip, which is all within this buy to sell range and these minor highs. That was a flip in itself. We react to that flip. We trade away. So bullish order flow kicks in, coming back to this doji or this buy to sell wicks. We react to this flip, trade away. we do mitigate it here, but there's still the extreme in play, like within this sell to buy. And then what does price do? Reacts to that wick. And that could potentially be the catalyst for the pullback into this whole M15 buy to sell range. Actually reacted from the M5 supply. This one here. That's good. And then that could be the catalyst. So we could be seeing that low being run out. But yes, that's one thing to look at is study where the reactions are from. And I can almost guarantee that there's some form of interaction between supply and demand, enabling a flip, and that is the reaction point. So now you can see here we've had our reaction to demand. Yeah, just under 3R. I'll partial at this low here. And then I'll set my trade to break even. Just to go over it and show you again. So you know I'm not lying. This is quite hard to do. Sorry, hold on. See that there? So stop losses there. Yeah, I got no problem in trading live for you guys, and I really do not care about taking entries anymore, because once you have a plan and once you have your entry criteria, your risk management in place, your exit plan, so to speak, and you trust it, you should not fear any trades you take, because as I've said in the past, it's all a game of probabilities. Like I could lose this trade right now and it would not affect me now, because I've seen this setup play out over and over again. Sure, we are not aligning with H4 structure, but considering we are bearish on the daily and the weekly, and we've had a strong reaction from the H4 supply above the daily buy to sell, taking out buy side liquidity, and then the aggressive trade away down, wicking the H4 low. So many things line up, and that's why I was happy to take the risk, because I just trade my plan and nothing less than that. If you try to like, it's always good testing things. Like that's the only way you get to certain points or certain milestones in your trading, is testing things. So I solidly recommend you just investing in a good course or mentorship. Trading is a solo sport, but it is good to surround yourself with like-minded individuals, and I guess learn from other people, because like knowledge is power, right? And then once you've established your system, go for it. Let's go to 4 hour. So if my whole narrative behind the high time frame is correct, and how we've swept these structural highs here, pairing of orders, and pushing price lower. If that whole narrative is correct, we could potentially be seeing new lows. But I'm not going to forecast. I'm just going to react to what price shows me. So take it from there. But so yeah, here, this is your initial reaction, right? Initial reaction here. That essentially should be the fail because we reacted to demand as we did here, right? And then price, it's still within this whole demand area, like this one. But as we've had our reaction, we failed to create. So that's where the buy orders are introduced into the market. But supply is truly in control. So supply overpowered demand, pushing price down. So this essentially and theoretically should just take this low, but I could be wrong. I am only human. So we'll see what it does. These are all areas for catalysts for pullbacks. Well, not pullbacks, it'd actually be a pro trend to this minor structure, but these are all areas where price could come to or gravitate towards to within this range. But I just want to see it take this low, to be honest. So now we've had M1 change of character, as indicated here. We can remove that. Still confident in my trade idea that this will take this low out because thinking of on a micro perspective, when price bottomed out here, this was the catalyst for this move up, right? We failed to actually close above this whole range, the range high here, and in turn we mitigated something here, and then bearish order flow kicked in, right? So that's just going back, repeating myself again. If there are enough buy orders in the market, meaning demand, then it should have no issue in breaking and closing above this high. But considering all what I've been talking about, hard time frame speaking, M15 is bearish currently. H4 is bullish, yes, but we took out the buy side liquidity above the daily highs. We've had an aggressive trade away last night in that news event, indicating an accumulation of sell orders were introduced into the market, and you trade away from the sweep, right? And then we swept Asian highs, had an M15 change of character after mitigating buy to sell within this old buy to sell range in itself. So order flow switched bearish from here in alignment with M15 structure. So shorts could be considered after seeing those line up. And then upon mitigation, we have our M1 shock and flip, followed by an M15 shock and flip. So this would be the decisional on the M15. I think I can see it here. I'll probably clean it on the 5 minute. Yeah, here. So we have our demand form after we break this high. Right? Price comes down, reacts to demand, fails. So this will be the decisional and then this was used as inducement into our POI, and we've got all our move trade. So we'll just wait and see. Currently running on 40 minutes now, so I probably will just pause it. Don't want to keep making the videos so gruelingly long. So I'll come back soon and see where we end up. Hey, back again. Apologies to keep pausing it all the time. Don't usually watch price print every minute. Usually I'm doing something else. But we've broken this low here, as I was anticipating, and that is where I took partials and set my stop loss to break even. Now I am pretty confident we're going to target this low, because we are clearly running with bearish order flow at the moment, and its price is really struggling to break any highs. So all order flow is in alignment with the M15 structure. And what do we expect from that is that we expect certain lows to be weak. Initially it was this one, after this M1 shock, right? So this is like where the time frames are fractal. So upon mitigation to supply, we had an M1 shock and flip, deeming this low to be weak because if true demand was present, it should have no issue with the accumulation of buy orders to break this high. And then same goes for here, right? So mitigation to supply, we had our M15 shock here. So this high gets run out, then this high takes this low M15 shock. So if true demand was present, there should be enough buy orders resting here for price to push and break this range high. So it's all fractal. So what I explained in this price range is the exact same for this price range. One thing to note out. So currently partialed, running a 9.2 lot now, 9.3. So how I partial, I just take half off and set it to BE. I don't take 20% off or 10% or whatever I was risking. So 1%. I mean, yeah, I don't take whatever my risk was off. I just go cut it in half because I'm happy locking in profit. It's starting to move pretty nicely now. As you can see here, now we've just created another flip. This low broke this high, enabling demand, and our reaction failure to creating another flip. I'll run through it again, and then I might hop off. I don't bore you completely. Now, I don't really want to run well over time, which I probably already have. So, narrative behind the trade. Yeah, I'll write it all down. Narrative. Daily, weekly, bearish, H4. So upon liquidation into that H4 supply that I identified, right? So it was a daily sweep. We had aggressive reaction to the downside. So that was in alignment with high time frame order flow and structure. That was in alignment with high time frame order flow and structure. So we'll break it down. Daily is clearly bearish. Weekly is clearly bearish. M15 is currently bullish. H4 is currently bullish, but upon liquidation of these highs, so this is structural liquidity, this is the daily high, that's structural liquidity. Upon liquidation into the H4 supply, which we did identify the refinement within there, as we went as far as the 1 minute, that 1 minute doji. We did identify that area of supply, and upon mitigation of that, we had the aggressive bearish trend change, as you can say, which on the M15 switched to bearish. Failure to close below that, and we actually swept that, mitigating demand here, which was, in my theory, the catalyst behind this pullback. Some could argue, considering the H4 is bearish and we swept the lows, this could continue bullish. I could be completely wrong, but I disagree. Just because of high time frame, we are so bearish at the moment, and this sweep above would enable price to go down, right? This is them playing ping pong, right? And then price correctively moved into this M15 range throughout Asia. We had a sweep of the Asia highs into an M1 buy to sell, which price gave off an M15 change of character and left multiple areas of interest. The extreme, the decisional, and there was also this one here. Upon mitigation of the decisional, we had a M1 stop and flip, which did break M5 structure to the downside, enabling the M15 change of character. And then that is where we were happy to take shorts, because order flow has clearly aligned with the M15 structure, and M15 being an intraday time frame. I don't look to hang in the market for days. I'm happy to get in and out within a couple of hours. And to be honest, within 47 minutes, there is some decent news coming up. So I would like to be out of it before then. Like, it could just correctively move down from here. Might not even come to my TP. It could actually just range from here until the news and then do some absolute fucking fuckery, and could go Who knows? Like, it could just do anything it wants. So I'll be out before then. My stop loss is at BE at the moment, so just wait and see what it does, and I'll post this one on my Instagram so you can see the outcome. So that will be me, and good luck.